Paul, do you agree with that characterization that we were oversold last week?
Yeah, I mean, I think we were oversold. There's some apprehension, obviously, going into the election and things like that. But I think what you just touched, Mike and Sarah were just talking on, which is something worth highlighting, is there's this massive tug of war in the market that we're seeing between growth and value on certain days and small caps and large caps. And you see these big day-to-day dislocations in the relative performance of the two. And what's a little bit concerning about that is when you go back to these, they usually occur in clusters, and the other two periods they occurred in clusters were in the late 90s, early 2000s, and then again in 2008. So, I mean, that's something that should be paid attention to here. I think the overall backdrop of the market is, until we see the technicals start to break down and some more confirmation of economic weakness, we'd still be more positive than negative. But you can't just ignore these things going on in the background.
Does it have to do, Mike, with the stimulus talks on again, off again, no deal, $1 trillion apart? I mean, I'm looking at the 10-year yield. It's lower. Yeah. So that signifies here that the bond market is still not convinced that higher growth is coming. That, and of course, it's being suppressed by the Fed.
Look, the bond market hasn't responded to almost anything. It's been in this flatline zone for quite a while right now. Even when the stock market was racing higher in July and August, it was just unmoving. And I do think it just shows sort of the Fed's buying all the mortgage debt out there that's being issued. It kind of really damps down volatility. You had declines in yields to deeper negative areas back in Europe today. So I don't know that that's a non-signal or just kind of a, not really telling you very much. I do agree, though, that there is certainly a psychological drag on not getting this extra fiscal boost. But maybe the good news is I don't think that expectations are high for it right now. So it's a little bit of maybe backing into the logic of saying it's less important day to day right now when you see a good consumer confidence number. And when also you see the fact that there is a little bit of a lag effect. So you have had personal income actually be topped up on an aggregate basis. And that's why maybe the overall economy is not buckling.
Paul, is the dollar having a big effect at the moment on broader equities, or are the moves kind of coincidental there?
No, I mean, I think you look at the last 5 months, we saw gains in stocks. The dollar was down all 5 months. The dollar's up this month. Stocks are down. So I think there's definitely a connection there between the way the stock market and the dollar move. U.S. S&P 500 large caps are very multinational in nature, so a weaker dollar helps them and will ultimately help their performance of their sales and earnings. So I think that's definitely a factor in things here. And if you see a strong dollar, it's going to have a negative impact on large cap stocks.
Shepard Smith here. Thanks for watching CNBC on YouTube.